one of the issues that we're talking about here today is properly normalizing so that we can see what the true operating activity of the company is. And you've heard us address before that depreciation is an important expense to be able to recognize. Why? Because it indicates that the assets that are being used to generate revenue are not fully depreciated. They're not old, they're not depleted. Potentially, and most likely, if they're still within a depreciable life, they're probably still functional, and they are what we would call productive assets. If I remove that depreciation expense, it doesn't make a difference to EBITDA. All that I did was I reduced my expense, I increased my operating income, ordinary business income, and made it equal to what EBITDA is. So there's no difference from a cash flow basis when we're talking about depreciation, but it is important to be able to recognize that this company still has assets that still have a depreciable life, still have a useful life, and that's important value needs to be based on the operating performance of the company. So here we're going to remove that net gain from Form 4797, and you can go to that form and find out what it is, but almost always it's not going to be a cash flow that we want to recognize. Now, there's a special note about perhaps if it's a rental company, and we'll address that in a future webinar. If we have the sale of business assets that are a regular part of the operating activity, we need to use what we call the income approach because it's going to impact our CapEx number, our investment in net fixed assets. It's not going to impact our cash flows per se, our EBITDA number, if you will, or our ordinary business income, but it's going to decrease that so that we have one owner. We want a single owner. All right, now let's also make this assumption that our owner 1, 2, and 3 are all fully engaged in the company and paid market rates. So the question is, what do we do with 3 owners? Do we remove this expense and pretend it's not there to try to develop SDE? And the answer is no, we don't. We're more transparent than that. So what we're going to do is we're going to reclassify owner 2 and 3 from officer compensation and place it in salaries and wages. The company still needs the service that is provided by these 3 individuals to generate this revenue and develop that profit. It's still an important expense to have. I may want to move this performance rating to reflect it wasn't quite at that 75th percentile. Maybe we'll call it at that 70th percentile. And let's say that we are pricing this deal because it is larger on EBITDA. If it was, say, if the company was worth perhaps $1 million, I might price it on EBITDA. If the value indication was less than $1 million, I'd probably price that by a weighting on SDE. So here we have our multiple on EBITDA, and let's think what that judgment just did. We have a value of 3.8 million. If we had left that at the 50th percentile, the multiple lowers, we have a value of under 3.5 million. That's $317,000 that we could perhaps justify variability here. And it does make us wonder about the operating system, if you will, and the stability of that operating system. There was a great quote today that talked about individuals or businesses don't rise to the occasion, they rise to the level of their systems. And so what we may have is an exceptional performance of the company, but if their systems don't present a stable outcome, then maybe their system is not very good. We could look more about their system. And when I say not very good, it may not be consistent. It may not be well developed in the entire operating activity of the entire company. It may be more reliant on the owner. They may have had some transition. Those are important numbers and important considerations that starts informing my judgment about price again. So I may say, All right, now given this variability, they've performed great in this most recent year, but they had some down years too of 8%, 8.9%. So when I start looking at the stability of the company, I might say this 70th percentile may be a little high. Perhaps I want to downgrade this 3.6, 3.7. That's the impact of the cost of the system. Here could be perhaps that was $100,000, $200,000, right? That starts addressing the risk that is associated with the cash flows. So that's a valid question. And we can see that, one, because we've normalized our income statement. And number two, we've considered our performance comparison to understand the profitability and the activity. Now, of course, you're going to need to confirm, perhaps overwrite that, but it does speak to the importance of normalizing the financial statements so that the performance comparison accurately reflects that operating activity and the systematic operating activity that is likely to continue after the seller leaves and continues to the owner. That's the whole element of operating risk. So we can measure that risk and its likelihood of continuity in performance comparison, and it impacts our most probable selling price. So that's pretty fantastic. If you've been hesitant to sell a BOV, look at the quality of this BOV, and I think that it's recognizable that you should not give this away. Now, if you want to rebate your seller upon a closed transaction, that's one thing. But what BizProValue will help you do is raise the level of your system earnings that you make, both from selling a broker opinion of value and then the deals that are related here, because you have such clean information that you can go through the selling cycle, you can go through the lending cycle. Everybody has the same information. Lastly, the next thing that will be developed is the confidential information memorandum. So from the quantitative information and the qualitative information that you imported, both the seller transcript and the tax returns, all of that starts now impacting your SIM. So now you'll have a preset content of SIM, a deal snapshot, executive summary, so on and so forth. And you'll have data that all comes from a central source of truth, a single source of truth. So you have great continuity in all of your publishing documents, which will come along with that as well. But the broker opinion of value and the SIM will all be single button pushes that will automatically develop, and I think in a format that you'll appreciate and will be helpful as you improve the system that you operate with. Deal volume goes up, deal quality goes up, your income goes up, more done deals. That's the power of BizProValue and why we like so much to support your success.